We are witnessing the collapse of Japan's carry trade. The entire situation has the potential to completely change XRP and restructure the foundation of international banking. However, the crucial question is whether Japan and the rest of the world are even remotely prepared for what is coming their way. I'm going to give a detailed account of all the current events between the US and Japan. Let's dive right in so you have the whole picture. I came into this amazing piece that perfectly sums up the current situation. Be ready for XRP to take center stage, former finance bullies. XRP provides the framework for the reconstruction of Japan's economy when it breaks. It is anticipated that 80% of Japanese banks would use XRP by the end of the year, with the Bank of Japan working with Ripple. The country is revamping its economic engine rather than merely responding. Remittances, exports, and tokenized assets are all becoming unstoppable liquidity flows thanks to XRP. Real-time impacts, quicker trade, and the ability to access trillions of dollars worth of illiquid assets are all made possible by speedier payments. XRP increases access, speed, and global reach, while trade disputes reduce GDP. Tariffs won't give Japan an advantage, technology will. New trains, not policies, will be used to build the future of economic power. Do you notice the change? Check it out. This clip provides you with the backstory of what started months ago. However, it is a little out of date. Here I'll roll a bit for you. Just so you know, we are watching video from the early stages of those trade war conflicts. Listen to this out. Over the March quarter, Japan's GDP contracted more than anticipated. GDP shrank by 0.7%, which is more than 3 times the decline that analysts had predicted. Exports and private consumption stagnation were the main causes of the decline. Furthermore, the data indicates that the economy was already struggling before Donald Trump's tariffs were implemented. The US president has levied 10% taxes on the majority of nations. Unless it can reach an agreement before then, Japan will be subject to 24% taxes starting in July. Trump has hinted that it would be feasible. I'm getting along great with Japan from Japan. We are on the verge of an agreement. However, Trump has also imposed 25% tariffs on US auto imports, which are vital to Japan. Furthermore, the likelihood of reaching a deal with Washington is still quite slim. Economists believe it's unclear what may spur growth given the dismal exports and spending. Tokyo might feel pressured to intervene as a result. Prime Minister Shigeru Ishiba has already received calls from certain parliamentarians to reduce taxes or increase stimulus. The administration claims that there aren't any such plans as of now. The Bank of Japan is likewise faced with a challenging choice as a result of the trade war. It was anticipated to raise interest rates again, but if a downturn brought on by Trump gains traction, that might not be the case. You know what? Disregard the remaining cacophony. Keeping you informed about this trade agreement and what they actually agreed to is what matters. Here is the new information. The US government will choose and oversee the $550 billion that Japan will invest in US projects. Additionally, Japan will buy $8 billion worth of agricultural items and $7 billion worth of U.S. energy products yearly, increasing U.S. rice imports by 75%. It will be easier for American automakers to sell in Japan without more testing because the U.S. will accept Japanese safety certificates for automobiles. Japan will boost the American aerospace and defense industries by purchasing American commercial airplanes and defense hardware. A framework for collaboration on rare earths or key minerals between the United States and Japan is also included in the agreement, which signals a memorandum of understanding in October 2025. Application of continuing advancements. A number of executive orders and memoranda are being used to carry out the deal, and the U.S. Commerce Secretary is keeping an eye on Japan's progress and informing the President on its implementation. The U.S. may increase tariffs in retaliation if Japan does not finance authorized U.S. investment projects. Japan will probably keep their word because they have a genuine stake in the outcome this time. The truth is that most governments will abandon you when the chips are down, despite their frequent and ostentatious announcements. Examine the past 10 or 20 years. There have been countless promises to inject billions or trillions of dollars. What appears when we fast forward? Nothing. If the wind is blowing correctly, you might be lucky and obtain 10%. However, there are actually safeguards in place to keep anyone from withdrawing. Now let's get to the juicy part. Check out this. You've seen how we got here. Train uniqueness is carried by the yen. The 40-year bond issued by Japan just hit 3.69%. Since 2007, it's the highest. What was the big deal about 2007? Hold on. And just like that, everything fell into place. This is a detonator, not a number. That yield is supported by 20 trillion in carry trade exposure, borrowed yen, and funding for anything from Bitcoin to tech stocks to treasury bonds. This trade produced money for decades. The loan is now being demanded by the Japanese bond market. 9 other leverage pools totaling more than $50 trillion are connected to the yen carry trade unwind. Hedge funds are trading cash bonds against futures on the treasury basis, with leverage ranging from 1 to 2 trillion to 100 to 1. A single surge in volatility sets off margin calls which compel treasury selling. 957 billion in commercial real estate loans are due this year, 3 times the average for the past of those assets in CRE. 28.7 are held by regional banks. It's terrible that 59 banks now have more than 300% equity exposure. $3 trillion in private credit. Ratios of interest coverage have fallen to 1x. There is no margin for mistake because borrowers are using operating income to make interest payments. This year's 694 corporate bankruptcy cases are the most since 2010, running 12% higher than epidemic levels this year. 51% of the S&P 500 volume is in zero-day options. The daily notional is $1 trillion. When volatility spikes, dealers switch from stabilizers to accelerants. Pensions in Japan have $4.4 trillion invested overseas. In 8 months they purchased 28 trillion yen worth of domestic bonds, the biggest payout in 14 years. They're returning home China, where gold reserves have increased for 11 straight months, while treasury holdings have decreased by 18% from their peak. There is no speculation in these pools. Funding markets, margin systems, and correlation structures that all work together under pressure bind them together. Whether Japan matters is not the question. I want to know if you comprehend what Japan just informed us. The relaxation process has started. Let's face it, things are getting a little crazy out there. The markets are currently experiencing a genuine panic. In Japan, Ripple is being used for domestic cross-border payment flows. What I want to know is this: what role do XRP and Ripple actually play in all of this chaos? Hold on as I pull this up so you understand what I mean. Take a listen to this. When do you believe the reverse carry trade will most likely take place? I believe they need to have ETFs lined up and XRP futures in place. I believe that everything must be in its proper position. There is the steady coin bill. It might be passed in a flash. Although Tether has essentially already migrated abroad, they have been informed that they would be bound by US regulations and the stable coin bill. MiCA is in your place. With the digital pound and digital euro in the Eurozone, the UK is prepared to depart. All of these other major central banks, including the Bank of Japan, are prepared to promote their stable coin and digital currency. With everything they require, Bank of Japan is prepared to proceed. All we need to do is wait for oil prices to soar. I'm not sure if it will result from a shortage or anything that occurs in the Middle East, but it will force the Bank of Japan to swiftly raise interest rates, at which point everything will start. I believe it's the gunshot that will set everything in motion and cause it to occur. And because everything is prepared and ready to go when they start this deal, it will happen much more quickly than people expect. Therefore, I believe that the CME is the final component they need to have in place in order to be able to hedge and make money after the 19th year in May. In addition to this, you have the XSRP ETF, which is a long futures XRP ETF with double leverage. Additionally, ProShares has introduced its long and short XRP ETFs. There are currently no spot ETFs. I believe that every institution is on board. Believe Jamie Chase, Jamie Dimon, and JP Morgan are on board. HSBC, the BIS, the IMF, the Fed, the Treasury, the US, and the BRICS countries come to mind. Everyone is cleared to proceed. It's really amazing stuff, isn't it? All those countries and agreements Jake was just dismantling. Check this out then. Indeed, the endeavor to propel XRP to the forefront of global finance is linked to Ripple's transition to ISO 2022. Here's what I'm truly interested in though. What remains once the house of cards collapses? What is the process by which the globe shifts into the next financial system? Does XRP have the key to opening the door? Right now I'm totally focused on that piece. Okay, the update for Japan is complete. As soon as anything new comes to light, you can be sure I'll be back with additional information. However, things are moving at a breakneck pace, and the next chapter is already being written. Honestly, anything can happen from here, so keep an eye out. It's Jake Claver next. This guy is exploring the prospect of XRP entering state.